Hey everybody, this is Jim at SB500chart.com. It's about 4:45 on August 19th, 2013. We're going to take a quick look at things. Before I do, I want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's look. Well, today we saw selling pressure throughout the day, and it looked like our neckline right here might hold until a little bit after lunch, when this line gave way. What's interesting to note, though, is that we're still pretty much in this little descending, call it a channel or a flag. There are a number of things you could call it. So let's look at this pattern a little bit more closely. You can see that that we came down right pretty much at the open. Let's zoom in a little more. Pretty much at the open, came down and tagged that bottom line, came up, tagged the top line, tagged it again. At that point, I was thinking, hey, we may break out of this little pattern and now head up to the 1680s. But instead, we came back down, made it look like that 1654-ish line would hold. Then that broke, and we spent the rest of the day really just kind of meandering sideways to down. I'm not going to say technically. We factually closed underneath this bottom support line, but by such a small margin, I don't know that you can really read anything. I don't think you can really read anything into that, because at the point we closed, that blue line, that lower blue line, would have been at 1647, and we closed at 1646. So we are about a point and a fraction underneath this line. But we still have this top line, I think, operating to give us a clue as to when this selling is likely over. So for right now, we are underneath 1654. I show the next likely line of support to be, hold on, I got to grab my little handle here. There we go. Now we'll put that back. I show the next expected area of support really to be down into the 1620s. So that's where we stand right now. It looks like we could stand to lose another 20 points or so. But if we break out over the top of this line, then for whatever reason we just encountered support a little lower than where we thought we would, and that sometimes happens. So let's go back and examine this line to see how important it might be. If we go back on an hourly chart, you'll see that we have two touches that I think are important. One back in the middle of June, and the other one kind of in the second week of July. So we extend this out, and that's where that 1654 was coming from. What this line was the possible neckline to what looked like could have been an inverted head and shoulders pattern that never really got confirmed. So that's where that line is from. Now, where's this line that's running up and would be in the 1620s tomorrow? Well, we got to go back a little further. Got to go back on a 4-hour chart and ignore what happens to all these lines. All I want you to see is that this line is drawn starting at the November lows, November 2012, and then on the next significant low, which was the June low. So that is a potential opportunity for a bounce here as well. If we don't bounce there, then we start looking to 1600, and then we start looking into the high to mid 1500s. So there's, again, sadly, no clear pattern that guides us here. We had this little head and shoulders top. We've already met that. This pattern lasted about a month long, and it pointed to, upon a breakdown of this line, it pointed to a target of about 1655. I've been calling it 1654, 1655. We've made that target. Now the question is, where is the S&P going to find a bottom, support, and then turn back up? And again, there's no big pattern that I see that guides us at this point. We're just looking at various trend lines and trying to see where we might look for signs of a bottom. Right now, I'm kind of glad that we're trading down in this little channel, if you will, because as long as we stay in this channel, then I think that kind of telegraphs the fact that this is a fairly controlled descent, that we're not seeing panic, that it's just people basically putting a little selling pressure on the market. That's fine. We need that. But we also need a sign of when we're done with that and we're going to head back up. And right now, the best thing I've got to offer is this top resistance line. Let's see if and when we trade more into this week, where we might see this line potentially break. Whenever it does, then I think the selling is probably over. And again, I don't want to put too much emphasis on that little late day slight bump underneath this support line that we've had for the past 3 days. So guys, there you've got it. We look like this neckline might work, but it appears that it's not. Next level of expected support comes from a trend line, and it's this turquoise line right here. And then if we get through that, then we come back to revisit this red line, which you'll recall is our all-time tops line that has its origin. Its first defining moment is the 2000 S&P top, and its second defining moment is the 2007 S&P top. So these are the next two lines where I would expect support. But if we break this little resistance line right here, I think that should at least set up a short-term rally to the 1680s. So there you have it. Oh, by the way, the one chart I want to show you real quick. I think a lot of this weakness is being brought on by the real estate. This is the IYR, the Dow Jones U.S. Real Estate Index Fund ETF. And look how weak this looks. That looks pretty bad. So if we even if we try to concoct a long-term trend line, I cannot find one that tells us to expect a bounce. I think we're going to get a bounce in real estate, but the question is where. So right now, real estate looks to be, to my eye, to be the perhaps the driving source of a lot of this weakness, and you can tell by looking at the real estate ETF. Backing out on this chart even further, That's not a pretty picture. So maybe it would bear looking at this ETF. You can see it did set a new high back here in at this peak back in late May. But that high was not an all-time high. That's just a new high since the market bottom of March 2009. So this looks to be really kind of the bad actor, if you will. Let's just see where we might get a bounce. There are a couple things that could happen. Oops. Grab the wrong thing. There we go. So this is not a pretty chart at all. About the only thing that I could see where we might get picked up here would be if we go off of some of these lows back in the summer of 2009 and pick up the lows in the late fall of 2011. Maybe that's a spot where this could bounce, but you know, this is looking pretty ugly. And if we look at that same chart in the S&P, you can see it doesn't really have the same feel or the same implications to it. So this is very interesting what we're looking at now. And again, just since I went down that rabbit hole, just to remind you that whenever this line breaks, I would think the selling is over. Potential bounce down here on this turquoise line. If that doesn't hold, then we would be looking at that all-time tops line right around 1600 as another spot for a potential bottom to get put in and for the S&P to start heading back up. So there you have it, your video for August 19th, 2013. Thanks for your time. Thanks for your support.